Welcome to a special edition of the $100 million Producer. Actually, we're in Philadelphia and we're together for once. First time we've ever met actually in person was this week. And we're going to do it live for you here in studio.
Yeah, happy to be here. For those of you that don't know, we had our Relationships, Not Transactions Summit this weekend in Philadelphia. Guest speakers, Renee Rodriguez, 2 days of just power-packed information. And we were just kind of chatting before of just, it really played into how we built our business.
Yes,
because this is all about creating relationships, not looking at your business as a transactionally minded business.
Absolutely.
So what's your thoughts?
I mean, and that's me. I mean, I built deep relationships with realtors over the years. Most of them became good friends of mine. And transactions to me were like the one-off refis that may or may not come back to you. But relationships, are they give and give and give and give, whether it's realtors, CPAs, you name it.
Yeah, and relationships to me, like, I remember like right when I got started in the industry, the paychecks were so important. Like I would run calculators, had an Excel spreadsheet. I was calculating how much my next check would be. It was about a year, I think, maybe 2 years into the business, that I just changed the whole philosophy. And I stopped looking at anything other than how many credit pulls did I do and how many relationships generated those credit pulls. And if I wanted, like we talked about, I think it was 2 times ago, about tracking your numbers, to even add the metrics in of relationships into it. How many referrals from this agent? And then metricing that. And if it falls off, why is the relationship slowing down? Did something happen in their life? Is it worth a phone call to them?
Yeah, absolutely. It's staying in front of them. And you're right. Sometimes those relationships do fall off, even if you do everything right. Just maybe the realtor or the CPA starts downsizing their business because they quit doing the right things on their side that was bringing in the business. And that's where we can coach them and say, what can we do to make you better? We've noticed, Kim, hey, I noticed that you're not doing as much as you did last year. Is there anything I can do to help you? And that just furthers that relationship if you can take that agent that's maybe struggling and bring them up even more.
Yeah, and for me, I always did check-in calls on those people.
Yeah.
So I just call them and I'm like, hey, Aaron, seems like it's been really, really slow. Everything good with you? Like, everything okay? And he's like, actually, my son got in a car accident. And I'm like, dude, like, should have called me. And it just takes a relationship away from, hey, I'm here to make money on you, to this is a true relationship. Like the little tiny things we would do that I've done in the past to cultivate, like there's a particular real estate agent. She is a broker of a 160 person team. And I really wanted to get in her office. And I was like, always hitting her up, nothing. Well, I started noticing every time I dropped by her office, I drop by every week, just drop in. Every time I walked by her office, she had Post Malone playing every single time. And I'm like, and then I see her post pictures at a Post Malone concert. And I'm like, oh, I know. So I hop on eBay and I bought a Post Malone bobblehead for 20 bucks. And I walked in and I set it down on her desk and I put my business card underneath it because she was in the back. I now sit in office at that real estate office every single Wednesday.
Wow.
As their in-house agent.
Yeah. And that's the things. It's just those little things that make them know that you're listening and that you care.
Correct.
And you're not just there to drop off some cheap donuts and say, please give me business. You're actually paying attention.
Yeah, donuts can work, but
they can.
It's not the best plan of attack.
Yeah. Especially if you get into an office where there are a bunch of. I'm out west, so we have a little different philosophy out west where we have all the gluten-free people. We have all the no sugar. I'm on this diet, that diet. So I found that cupcakes and donuts sometimes aren't always the best thing to do. It's funny though. One of the things we were talking about relationships. We were doing a workshop at the summit yesterday where we wrote down like referral partners. And the first thing I said was title companies. Everybody else at my table was like realtors. I said title companies. And they were like, oh. And then it created a conversation like about title companies. Like, well, what do you mean? I was like, well, some of my biggest realtors were referred to me through title companies. And then, went on to how that all worked, how I just befriended title companies. I treat them with respect. I check in on them every week when most loan officers don't treat title companies very nice.
No, it's horrible.
It's horrible. It's like, why funding isn't done, recording's not done. And then when they collected all of our sheets and they put the thing up on the screen, title companies was on there and they're like, well, you're with your executive with the company, you probably knew the answer. I'm like, no, they probably got the answer from me because Anthony's heard me say it for years. Title company, exactly. Title companies. But always look for those relationships. I mean, we talk about realtors all the time, but realtors are one small piece of relationships.
They're one small piece.
The biggest piece.
So the first thing I wrote down was everyone, because literally everyone. Yeah. Like that's just my philosophy on it. But I put down divorce attorneys. Like divorce attorneys for me have been a massive source of income. As much as we don't like the prospect of divorce, like we're not sitting here like, oh, we hope you get a divorce because we get business. No, but the reality is the majority of divorces end with the sale of a home and the purchase of 2 more homes.
Yeah.
And if you can get in the divorce community set up and actually start working with these attorneys, they'll just refer you. This happens. If you're going to go get a divorce, you are talking to your attorney before you talk to your realtor. You're talking to your attorney before anyone. That attorney calls me. Now I've got, hey, best realtor, I've got a listing for you coming up and I've got 2 buyers. That's a game changer. You want to win someone's business. And I'm one of those weird guys that I rarely got like leads that didn't have realtors, but when I did, I usually gave those leads away to the realtors I wanted, not necessarily the ones I was already working with.
Absolutely.
Now, here and there, I would pass them along, but I'm like, hey, I've got a triple side deal here. I have been going after this realtor forever. We're picking the phone up, and I'm like, hey, I got 3 deals for you. We need to talk.
Yeah.
And you want to talk about an inroad. Yeah.
So what I've done in the past is I've kind of got a little bit of a national presence over the last few years. And I get a lot of people calling me out of state saying, hey, my Aunt Betty's buying a home in Arizona. Do you have a good realtor? Those I would give to my better realtors.
Agreed.
The ones where I actually had a lead that I was generating through whoever, divorce attorney, bankruptcy attorney, whoever, those are the ones I would give to maybe that realtor that I'd done one with, but then never heard back from for a while or really been working on, because it builds trust with them that, hey, it's not a one-way street.
Agreed. No, I agree. And for me, I love the prospect of a loan officer giving leads out to realtors. Like when they come in, that's what we do, and we can reciprocate our business. But I also see a lot of loan officers, especially recently, they're making it like their business model. What's your thoughts on that business model?
Yeah, I'm against it. I mean, the loan officers that go out there, and first of all, if you talk to agents and they say, well, this loan officer says he's going to give me all these leads. Okay, usually they're horrible leads. Trash. Leads. Better, and I'm straight up front with my realtors. Every one of my realtors know, hey, you're going to get some reciprocation from me, but it's going to be way, way lopsided.
Yeah.
Just like my insurance agent, he's getting way more leads from me than I'm ever going to get from him, and I'm okay with that. I know my insurance agent can give me one here, one there, where I can give him 10 or 12 a month.
Correct.
And same thing with the realtors. A good realtor will know how the flow happens.
Correct. And it's one of my favorite arguments to have. Like I used to post a lot like on Facebook about like, hey, you're gonna get your business, blah, blah, blah. Well, these realtors would come on and they're like, I'll send you a lead as soon as you send me one. And it's one of my favorite things to respond to. And I'm like, let me break it down for you. There's 2 types of loan officers out there. You have loan officers that spend all day working with referral partners, and they spend all day working on actual real pre-approvals. And then you have loan officers that spend 90% of their time farming leads that the majority of are just trash. So you're talking a 30 lead to 1 conversion ratio. So instead of working on that pre-approval for you, they're out dialing and dialing and dialing, trying to generate the 1 buyer in hopes that you send your business there that they're going to be too busy dialing for dollars for to actually handle. And for me, it's just never been my business model.
Funny story. I'm going to show my age here. I've been in the business since the mid-90s, a little bit old, very different time, but one of the first big producers I knew that kind of took me under his wing and taught me a lot. This was back when everybody's in offices and realtors would come in sometimes and talk to you with their clients. And I remember this today. This realtor named Sharon came in, and she was kind of Joe was the sales manager, and she was really giving it to Joe about and she was joking, but she was saying, well, where's my leads? I've brought you so many customers and you hardly ever give me anything. And it was part jest, but there's always a little bit of truth in jest.
There always is.
And I remember this day, he reached under the front desk counter and pulled out the white pages and dropped them in front of her and said, that's what you get when you ask for just unlimited leads. And she had a shocking look on her face.
What's the white pages?
Yeah, I was gonna say, yeah, you guys that are like under the age of 45, the white pages. We used to have to look things up. We didn't have cell phones or internet.
Oh,
and,
man.
Yeah.
No,
But anyway,
you're dead right. And the whole philosophy behind it. Sure, there's some loan officers that do very well at it, and that's their business model. For me, I found the best business model I can set up is to create true relationships. I don't want to do business with every realtor in my market. There's a lot of them I don't like.
Yeah.
I wouldn't go to a game with them. I wouldn't go to a concert with them. I wouldn't invite them over for dinner at my house. I don't want to work with them.
Yeah.
I want to work with a group of people that I could pick up, put in a party bus, and go to a game together, and we're all going to be on the same energy level, the same.
Yeah.
I want to work with people that I like,
Yeah.
not just everyone because it's going to give me another transaction.
And I'm the same way. Now, I will say this for people watching this: if you're newer to the business, you take every realtor you can get, and then you weed through them. You know, it's like being on. I'll go with the younger people today. It's like on Tinder. You know, you swipe right, you swipe left, and you know you gotta go through a lot of toads to find the prince, so to say.
Toads to find a prince. I thought you said toads for a second. I was like, I'm not even going there. But yeah, you know, we've had amazing time up here. This whole relationship, not transaction. I don't know. For me, it's been something that I have just drilled into myself and my team for so long.
Yeah.
And I love to see the corporate side of the business taking on that mission.
Yeah.
Because a lot of loan officers, a lot of teams have that mentality. They've learned that mentality because most of the time they don't start that way. But what a rarity that we have a corporate office that's taking that transaction or relationships, not transaction, up from a corporate level down.
Yeah, one of the things that threw me my first week on the job here at UMortgage, and this isn't necessarily commercial for UMortgage, but it's how our philosophy is here. My first few days here at corporate, when I first onboarded, I kept hearing talking about clients. I'm thinking, why is Anthony the CEO talking about clients? And then it dawned on me because it wasn't explained right away, but then it was explained. The loan officer in our company is our client in management.
Correct.
So I'm in management. So my client is the loan officer. Andrew's client is his loan officer, is a branch manager. Then the loan officer's client is the realtors and the buyers. You know.
Correct.
And Sabrina, our ops manager, her client is her processors and her LCs. You know. And we look at it that way because if I can't make my loan officers' lives happier and easier, they can't make their clients happier and easier.
Yeah, and if you're a loan officer, branch manager, loan officer, if you're originating, I'll say that, if you're originating loans, you actually have a challenge because I come from business development management. My background is entrepreneurship, starting companies. And normally when you start a company, you are either B2B or you're B2C, business to business sales or business to consumer sales. If you're a loan originator, you need to think of it as a business because you actually have business to business and business to consumer at the simultaneous time. And those are very different selling prospects. Those are very different marketing prospects, different treatment prospects to get to keep the relationships happy on both sides. And so if you're starting in this game, if you're just now breaking into it, you've got to get in with a business-minded mentality. Literally, draw out your marketing plan. How am I going to create a client that turns into a relationship that feeds me 10 more deals? I saw a metric, somebody pulled it up at our table yesterday. The average millennial will do 12 mortgage transactions in their life.
Yeah, that's amazing.
12 in their life. If you're doing a transaction, you get one.
Yeah, exactly. And maybe two.
Maybe two. But if you create that into a relationship, alphabet dial. Pick the phone up. Do random phone calls. Call an entire letter of the alphabet of your past clients the first week of the year and just, hey, checking in. How's the family? And then go deep into these things. Like if you're building relationships, I always asked all the questions. Like people would literally like, why do you need this for a mortgage application? I said, I'm not taking this for the mortgage application. I'm taking this so I better understand you as a client. Do you have any pets? Oh, what you got, dogs or cats? I got 2 dogs. Oh, what's their names? Boom, boom, done. And then I would call them 6 months later after they bought the house. Hey, I remember you telling me you were gonna put a deck in the backyard. How did you end up finishing it? How's Fido doing? I mean, You want to talk about creating relationships. Now people understand that you care about them.
Oh yeah. Yeah, it's like, I mean, all my realtors I'm Facebook friends with and Instagram, and I look through their timelines, and I don't bug them, but I always share their listings. But more importantly, I'll see like one of them's daughter is in volleyball. I know your daughter's in volleyball, but let's use that as an example. The daughter just won her regional tournament. I'll go on there and say congrats, and then I'll find the daughter's Facebook and I'll say it on hers too. And they just know that it just shows I care. It just shows that, hey, Todd's thinking about my family. And it goes a long way.
Yeah, and if you're doing
as simple as that.
If you're doing it as a sales tactic, it's going to come off as disingenuous. Yeah. You actually have to be that person. And if you're not that person, go get some help and become that person. Yeah. Because empathy goes a long, long way. Yeah. Like, I don't sit and scroll Facebook and it's like, nope, oh, this kid graduated college, that's not a realtor, not commenting. Yeah. No, if I see something that's amazing that's happened in someone's life, I'll actually, a lot of times, to get even noticed on it, I will share their Facebook post to them in Messenger. So their Facebook post pops up, and then I'll type them a message, hey, saw this post, congratulations, so excited for you. And now, instead of just one of 100 comments, now you're in their Messenger with it. Yeah. Like, and again, it has to be who you are. Like, you can't do this because, you have to do it because of who you are.
Yeah. If you're doing it for a paycheck, it's not gonna be successful. You have to truly like your clients, you have to truly like your realtors, and you have to root for their success. Just like I root for everybody in this business success. That's why I've mentored so many people for free over the years, because I want to see everybody successful. I had so many people help me throughout the years of my early years in this business. If I can't do that for others now, I shouldn't be in the business. And the same goes for our realtors, our clients, and just everybody. You have to have, like you said, empathy. You have to care.
Fellow loan officers, you don't have to work at the same company or on the same team as me. You've got a question? Go to my Calendly link, book a 15-minute phone call with me. Yeah. I'm all about sharing knowledge. Yeah. There's no trade secrets that I hold tight to my chest. Yeah. That's why we do things like this. We're just literally we're spelling the playbook out. Yeah. You may ask, why do we give the playbook? Yeah. Because we know that 99% will not implement, and it's not a threat to us, but at the same time, for the 1% that will, I want to give them the roadmap. Yeah. When I was climbing the ladder, I had people above me that put their hand down to pull me up. Yeah. And I'm going to do the same thing and reach down and pull those who want to come up with me. Yeah.
Absolutely. I'm going to change the subject real quick because you said ladder. And Rene Rodriguez today spoke. And he put a slide up that showed a guy trying to get to the top of a wall with probably 100 ladders piled up, and he was climbing up the ladder pile instead of putting the ladder up like a normal person would. And what that represented is so many in our business buy every new shiny toy out there. You name it, they're buying it. They think it's going to make them successful. And the point of Renee's slide was, if you don't use the tools that you have properly, you're wasting your time, just like the guy that had a stack full of ladders that would have been better used as kindling instead of getting up that wall.
You would have burnt the wall down faster.
It would have. No, but it's so true in this business. I see these people that every new little gadget comes out and they're buying it. And
they think it's going to change the world. Like, you get me going on shiny object syndrome in this industry. Oh my God, I want to. It drives me insane. It's like, oh, we've got a great CRM. Yeah, it's got a 19% implementation in your company. Yeah. CRM isn't going to save you. What will work is what you use, and what you use consistently. If you're struggling in business, getting Zapier isn't going to fix your business. No. It's just not going to fix it. It's what you do and what you do consistently, over and over and over again. Like, the amount of tools I use in the mortgage industry, I have a CRM, I have MBS Highway. Yeah. And that's it. Some people are like, well, you don't have a mortgage coach? I've never found that for me, it's not a necessity. It's one more thing that is just another tool in my tool belt that I will use and then not use. I'm not looking for the savior. I'm looking to literally take things that I'm going to implement every day.
It's funny you say it, because mine was CRM, mine was MBS Highways as well. I tried one other thing. I don't want to knock the company because they're a name sponsor. It wasn't for me. But it does work for some people. But MBS Highways was it was a must-have.
Yeah. And I know Mortgage Coach, like, I'm not knocking Mortgage Coach. Yeah. It's just never been in my portfolio. I'm at where I used to work, everyone's using it. And it's an amazing software. Yeah. I just don't want a bunch of things. I just don't want more distractions.
It's about finding it's the ladder. It's the pile of ladders. You have to use the tool right. If you're not going to use it right, then don't buy it and don't use it. You know. And speaking of MBS Highways and Barry Habib, Monday Barry's going to guest spot on our 4 p.m. sales huddle, which was a huge get. It's hard to get Barry to do things like this, and it was just a testament to just mine and Andrew knowing Barry, and then
we tag team him in a group message.
Yeah, we tag team him, and then he sees UMortgage growing. So if you're with our company, you know, definitely tune in on Monday at 4 p.m. Eastern, because Barry gives massive knowledge. I mean, you know, guy's amazing. Just the knowledge he drops on everybody.
And this probably won't be a 30-minute sales huddle. We'll probably roll
It'll
a little
be
over.
extended. It'll be extended. Just
It'll be
plan
extended.
for an hour.
Yeah, plan for an hour, because I mean, listen, if you can't find an hour out of your day to sit and listen to arguably the most intelligent mind in mortgage-backed securities and housing market data, probably not the right industry for you.
No. He's a must. If we don't have 200 plus on that, I'm going to be extremely disappointed, just because, and everybody better watch the replay, because it's you have to know these things to know where the market's going and how to educate your client. And unless you're smarter than Barry at this, which I don't know very many people that are, maybe Jerome Powell could do better than Barry. I doubt that. They can't figure out inflation. So I think Barry could probably be running for Fed president and do a better job. So,
Jerome.
Yeah, we don't want to go down that road.
Don't get me going on a Fed. That's another hot topic for me. But no, yeah, join us if you're, with UMortgage. Join a sales huddle. That'll be Monday. Barry's going to be there. It's going to be amazing. Yeah. How are we doing on time, guys? Oh, we're good. We're good. Oh. Sorry to interrupt. Just got to check sometimes. So we're good. We got plenty of time.
Yeah.
Yeah. So the ladders thing hit hard today, because I see so many people make that mistake. Yeah. I see so many people, even they get a tool and they misutilize it. They don't use it to its capacity. If you're going to use something, use it. Like, actually dive into it. For me, I look at this business as it's actually a really simple business. It is not hard. It shouldn't be hard to close 3-4 deals a month. It shouldn't be. In this market, it can be challenging. Interest rates are a big factor in this. There's a lot of things that can be challenging. But the reality is, this business is not hard. People make it hard. They make it hard by being disorganized, taking incomplete applications. I mean, you want to talk about a hot topic. Like, take an incomplete application, submit it to processing, and then get mad at your underwriters when they suspend your file. Like, do a good job on the very front of your transaction to make the back end easier.
Yeah, when it comes to applications, I mean, most of us are doing online applications, but that doesn't mean that what the customer fills out online is the end all, the be all. It means they fill the application out the best of their ability. Then you call them afterwards to go over that application. You fill in the blanks that they've left off, because if most loan officers can't hardly fill a 1003 out, the customer sure as hell don't know how to fill a 1003 out. So.
And yeah, they don't know how to calculate their own self-employment.
No.
And there's always like questions even. So I always do the review call with an application. I always re-ask some of the questions.
Yeah.
Are you obligated on child support or alimony? All it takes is one of your deals dying at the closing or dying through underwriting because they marked no and they find it on the bank statement. And I always pause at that moment and I tell them, I'm asking obligated, not if you pay. Because even if you and your ex-wife are back together and you're all happy now and you're not paying that alimony, but if the court order's still in place, you still owe it.
And you have to ask those questions, because I've run across this multiple times over the years. They'll mark that they're divorced, and then you talk to them and you go over it again. Well, we're in the middle of a divorce. Okay, now we got a problem. And I've seen and heard of deals getting all the way to the closing table, and it's like, wait a second, you're not divorced? Well, your husband has to, or wife has to sign off on this, and they're like, oh.
Try that in Florida. The state of Florida does not recognize separation as a legal status.
Yeah, and that's
so that's a mess. So, but yeah, you'll run into those issues all over, and it's just, I don't think I can reiterate it enough. The importance of doing a good job in the first day of a transaction.
You have to.
It'll make the next 20 days of that transaction going so much easier. And go ahead.
One of the things that like keeps me up at night or aggravates me and gets my blood pressure boiling is tolerance curves. And today, a branch manager walked up to me and said, "Hey, do you think we can get around tolerance curves?" Well, what is it? He said, "Well, my loan officer put in a VA first time use, and it turns out it's a supplicant use." Okay, well, how do we not catch that up front? I mean, I mean, I think it's a newer loan officer, but still, that's the fundamental of going over the application.
And that's the fundamental of a branch manager.
Yeah.
Like, I'm sorry, but like I have new loan officers on my team. I'm reviewing fees before that file goes out in the first 20 loans.
Yeah.
Like, there's just things we have to do. Like, if you're disclosing a VA loan without your COE, stop. Like, don't do it anymore. Like, it's so dumb.
Honestly, it's one of our better branch managers too. So, but it got missed. But
Mistakes happen.
It happens, but it's the idea that you have to do the application. You have to have the COE. When I hear that loan officers are turning files in without COEs, I'm like, how do you know they're VA eligible?
You don't.
You don't.
You have no idea.
Yeah, that guy could have been kicked out of the military for God knows what and doesn't have a.
Or he had a VA short sale 24 years ago that zapped his entitlement. Or there's a little line on the certificate of eligibility that you may have to send that entire loan package after you get clear to close to the VA and let them review it for a week, 2-3 weeks, as long as they take.
And here's the other thing. Anybody that knows me is watching this knows that I've never done VA hardly. I've done a few in my entire life. I'm not a VA person, but even I know you have to have your COE up front. If I know that, I mean, everybody should know that.
Yeah, you have to. And I mean, I'll give a quick story on it. And like, this is how important that COE is. It was one of the first VA deals I did. I wasn't very well versed, didn't have a COE, submitted the file. Oh, I didn't have my VA login yet is what it was. So my processor pulled it. Everything was great, entitlement was there, but missed the note that it had to go to the VA. So we had to delay closing like 3 weeks. The VA reviews the file, and the VA denied the loan, stripped the veteran of his pension, and took away his entitlement. Gone.
Wow.
So your COE matters. Upfront file handling matters. Reviewing your bank statements. Like, I see it all the time with loan officers. They just drop the bank statement in the file. Take a minute and a half and look at what your client's spending money on. I caught one just the other day for one of my loan officers. He was like, hey, I see this charge on here, and I'm like, the buyer's married, but there's a $750 Venmo 3 months in a row because he gave us 3 bank statements to a woman. And so call the buyer up. Hey, are you obligated on child support? He said, oh yeah. He said, I pay my ex-wife. And I'm like, boom, caught it. Killed the DTI on the file. Underwriting would have caught it. Yeah. But we didn't get egg on our face. We caught it at pre-approval.
The other big one is IRS debits. You know,
oh, man.
I mean, it's now the time of the year that you can have an IRS debit out of a bank statement. It means nothing. But if you see it, you got to ask.
Got to ask about it.
And then they might be like, well, I just finished my taxes. I owed $218.
Right.
Okay, great. Then I'm going to probably need a letter of explanation, or I'm going to need your taxes to show that it actually matches, or I'm going to need more bank statements to show it's not an ongoing payment to the IRS.
That's great.
But it's just those little things like that. It's called Loan Officer 101, guys.
Basics.
Seriously. Loan Officer 101.
It's the basics.
Yeah. So, can't say enough about the basics. Without it, you know, you can have all the bells and whistles. You can be the greatest salesman in the world. You can have all the realtors in the world. If you don't do the basics, it's never going to be successful. So,
no, because you're going to burn every bridge you build.
Yeah.
And that's just the reality of it. We talk about relationships. You want to build a strong relationship, become an absolute monster at the basics of your files. Read the guideline. Read the USA Answer Your Damn Phone. I say read the damn guidelines. Print the 4000.1, the entire handbook, all 1,000 pages. Take it to the pool for the weekend and sit and read and see what you find. Become an expert in your craft. And you're not going to have the issues that everyone else has where they build a bridge with this realtor and then the first deal falls apart and you light that bridge on fire and then you got to go build another one.
Yeah. I think we're about out of time.
Time flies.
So I guess, it does fly. And it's really cool to be here together for a change. You know, I mean, it was really cool. I mean, me and Andrew's known each other through Facebook, you name it, mutual friends
forever.
You know, he was the retail version of me. I was a broker version of him, basically. And, you know, and now we've been working together for months, and we finally got together here in Philadelphia for a change. A little cold for both our bloods. He's a Florida guy, I'm an Arizona guy.
Doesn't work.
But basically, we learned a couple things. Takeaways today. Read your guidelines.
Yes.
While you're waiting to answer your damn phone.
And stop chasing shiny objects.
Yes.
All right. Answer your damn phones.
Yeah.
Peace out, guys.